Okay, yeah, I got everything ready to go. So, okay, yeah, I'll go in and get started. What I'm gonna do, guys, my name is Devin. I go by Gusto on Twitter and in the Discord, but my name is Devin. This is the second session that I've done on trader mentality. The first one was more of an introductory session, just talking about things to look for as a new trader and whatnot. So this one is going to be a little bit more detailed, and then I got a few more sessions that I'm going to be doing going forward. But this one is strictly about trading mentality. I mean, it affects everybody, whether you're new or if you're old. It kind of really doesn't matter. Everybody gets affected by it. But I'm just going to go over a few things with you guys to make your trading a little bit easier, because that's probably the biggest strength that I have, is being able to keep my emotions in check while I'm trading. I do get excited on a win, and if I lose, I might get a little down or whatever. But at the end of the day, I'm pretty much able to walk away from that trade and move on to the next one, and not go back and try to revenge trade, or if I'm up on the day, not going, keep trading and breaking my rules and all that stuff and giving back money. So I just want to make sure everybody is equipped to, handle being in the market, especially if you're new. That's the biggest key if you're new, is to, preserve capital. If you're not trading with the paper account, you're trading with real money. Preserve capital and be able to, learn and grow in your trading, and then eventually become profitable to, relative to whatever your goals are. So like I said, I'm gonna be sharing my screen. I got a full template of things to go over, and I'll also be taking breaks in between each section and answering whatever questions you guys might have. If you came in, a few minutes into me talking, and I'll remind everybody, this is being recorded. It'll go up on the Mullins Trading Academy YouTube page for you guys to watch at another date. And then also, I'll be posting any links that I need to post onto my Twitter page and in the Discord as well, if you are in there. So let me pull my notes up here, and we will get going. I'm also recording this from my phone, so yeah, it's all. I do everything literally mobilely. I hate getting on the computer, so just so you guys know. So let me pull my files up. So here is the template here that I put together. Actually, you know what? Here, I'm gonna go to my notes. It'll be easier for me. And you guys get the meaning. So mentality. So the biggest question I usually get, because I post a lot of my trading tips that I like to post, they don't usually revolve around technical analysis or fundamental analysis, or any type of actual stock related analysis. I'm more of a mentality guy, and also I've been dubbed the hype man of MTA, which I actually take pride in being. So I'm pretty much, I trade, I try to hype everybody up, make sure their energy is good. But your emotions, can be affected by your energy, and vice versa. So, but the biggest thing I get from everybody is, why do people talk about emotions while trading? Essentially, they are everything. If you listen to the Penny Lane podcast by Blaine, who is my co-host here, they were talking about trading and gaming. And I look at trading as a game, but as they talked about on this most recent episode of the podcast, you're playing a game with real money. And when you have money on the line, of course, your emotions are going to be involved. I can attest to that. I'm sure everybody in this session can attest to that. Anybody who watches this video, they can attest to that, especially if you're new. Like I said, your money is on the line, and we are emotionally attached to our money because we work hard for that. That's kind of a given. And then, specifically as far as, winning and losing a trade, if you're looking at it as being a game, if you win the game, you're going to get excited. If you lose the game, you're going to be upset. It's just going to be ramped up to an entirely different level if you're playing with money. So the biggest key to trading, I personally feel, is being able to keep those emotions in check. Because this is pretty much a high risk and a high reward video game with real prizes and real losses. That's the simplest way that I can put it. So before we go any further, does anybody have any questions up until this point that they wanted to ask before we really dive in? You can unmute your mic and ask them, or actually it'll probably be easier if we ask them in the chat. I'll jump back into the chat and go through them. So if you do have any, just drop them in there. Oh, James is here, yay. Hi, James. What's going on, man? So, yeah, I'm not seeing any right now, so that's fine. I'm sure they will come up. I just wanted to make sure that we had a lot of questions last time, so I just wanted to make sure I set everything up so we can get to them all. Let me go back to my screen sharing. We will dive in. Okay, so how do your emotions affect your trading? They affect your sizing. By sizing, I mean how much money you're willing to put into a trade. And as far as sizing goes, and the amount of money that you put in, it could affect your risk tolerance. It could completely throw your risk out the window. If you get really too deep into it and throw too much money into a trade, especially if you go down on a trade, you're going to want to make that money back immediately. So it can affect your sizing. It can affect you not adhering to your rules or your strategy. It can lead to revenge trading. And on the opposite side, if you're consistently winning, it can lead to what's called the hot hand fallacy. Take this off. We'll keep it moving here. So revenge trading, if you don't know what it is essentially, say you lose on a trade, on Monday, and say you lose big. If your emotions are not in check, it could lead you to revenge trading, which means either, you could go back to the same ticker and try to get a win on it. You could go scurrying around, throughout the market trying to find a ticker to play that, not having done any charting or any analysis or anything relative to your strategy, just to try to make that money back. And revenge trading leads to more losses. I know there's plenty of times where people will revenge trade and they might get a lucky win, but that's all it is it's a lucky win. On the flip side, we have the hot hand fallacy. The hot hand fallacy is, say you go on a winning streak, you win multiple trades, in a day or over a streak of a few days, and you start getting really confident to the point of being arrogant, and then the market will literally kick your ass. It goes back to the sizing thing again. You could go really heavy on a trade because you've been hot and you're blind to, your risk, you're blind to your rules, you're blind to your strategy. Again, you can take a big loss. The biggest thing that I can recommend to get your emotions in check is there is a book. It is called Trading in the Zone by Mark Douglas. And as you can see on my screen, I highly recommend you read it. If you can pick up the paperback copy, you can pick up the hardback copy. And just to show you, there is an ebook available. I will go into my Audible and literally show it to you. This right here. You're going to want to read this. I have read this. I went through it for the third time this week. Trading in the Zone, Mark Douglas. Please, if you don't do anything else trading related as far as materials or reading goes, please read that. I'm actually going to go over a few of the points that he talks about within the book that have really stuck with me. I have them on my trading plan. My trading plan is in here in my notes in my phone. I go over it daily in the morning, when I'm at work before the market opens and I get some free time to look over it. But he talks about, following your strategy. He doesn't really talk about building a strategy, but it's more so following the strategy that you've built, using your edges, which an edge is pretty much, something that you've mastered in the market, that maybe it might be, a certain type of sector that you like to trade, or, maybe the time of day, maybe you like to trade the open, maybe it could be the strategy of trading that you're doing, whether it's swing trading or day trading or options, whatever. That's an edge. He talks about, using your edges and also sharpening those. And a few other things to stay consistently profitable in the market. And I got a few key points. I'm actually going to switch back to my files and we'll talk about it in here. So I'll highlight it for you guys so you can see it where I'm starting at. And I'll just go, quickly over these. If you actually read the book, he goes more in depth on them, and so you can understand it. But the 5 fundamental truths of trading. Anything can happen, and literally anything can happen in the market. If you guys haven't seen over the past couple of days, on Thursday we had the Fed speaking, and all the uncertainty in the market. Some things were running, other things were not, and then around 2 o'clock, pretty much everything flushed. Except for my vantage point, the only thing that didn't flush were bank stocks in the financial sector of the S&P 500, which I actually played. I played Bank of America and got a scalp off of it. But anything can happen. The thing is with that is to be prepared for anything. Number 2, you don't need to know what is going to happen to make money. This is why we have what's called risk reward. You define your risk when you go into the trade. You know what your reward is going to be. You don't need to know what's going to happen next to make any money. You're not going to win every trade, but going in open-minded, understanding that you don't know what the market makers are going to do. You don't know what the institutions are going to do. You don't need to know what's going to happen next to make money. It's all about preparation at that point. Number 3, there is a random distribution between wins and losses for any given set of variables that define an edge. Basically, I took that as to mean, whatever your edge is, you're not always going to win, based on your edges and your strategy. You're going to take losses sometimes. And those losses, again, will be randomly distributed throughout your trades. The key is to learn from those losses, to analyze your trades and make notes of it. If you need to update your plan or your strategy, do that. And then focus on, those losses the next time you go into a trade, you know what to look for. Number 4, an edge is nothing more than an indication of a higher probability of one thing happening over another. So again, with the edge thing, if you've been trading long enough, you start to see certain patterns. You see things that happen in the market. The more screen time you put in and the more time you put into trading as a whole, you're pretty much playing, the probability and the history of, certain outcomes. If you've seen something happen numerous times, the probability is that it's going to happen again. But it goes back to number 1, anything can happen. And number 2, you don't need to know what's going to happen to make money. All you have to do is be prepared. Number 5, every moment in the market is unique. We can go back to this week again. Everything dumped off on Thursday because of the Fed. Yesterday was quad witching. A lot of things dumped off. But if you were looking at, a certain number of tickers, the last 15 minutes of the day, there were some things that were running. You started seeing sector rotations, money coming out of one sector and going into another, by big institutions. You saw a lot of growth names that took off the last 15 minutes of the day. And you saw some growth names that were pretty hot, to end the week, they dumped. So literally every moment in the market is unique. Those 5 fundamental truths, I literally, for me personally, I associate all of those things again with being prepared. If you follow me on Twitter, I'm always talking about, time on the weekends and time outside of the market. That is your preparation time. And I feel personally that 90% of trading is literally preparation. Looking at charts, charting levels. If you like, I personally trade options, so I'm always looking at chart patterns, and I'm always trying to find trigger points for when I'm going to buy calls or if I'm going to buy puts. But if you're a swing trader, doing your DD on a stock that you might like and might want to get into, if you're a day trader, going over your trades for the week and trying to see, your wins and your losses, which you can improve on and what you did well. Preparation is key. So Monday morning at 9:30, when the market opens up, all you have to do is just execute. That's the other 10%. So does anybody have any questions to this point? I know I was kind of going through those quickly, but if anybody had any questions on those first 5 principles, I can get those answered now. Let me go back into the chat, see what we got. No questions right now? Okay. All right, well, as long as everybody is good, we can move forward. That's fine. All right, we'll say, keep it coming, man. All right, yeah, I'm not going too fast for you guys, am I? Just say in the chat if I am. I can slow it down if need be. My brain usually goes like 1,000 miles an hour, and my mouth flies with it. So, okay. All right, thanks, James. Cool. Let me go back and share my screen, and we'll keep it moving. And at some point, I'll turn my camera back on. I remember with the session last time, it was kind of hard to decipher when I was on camera and when I wasn't. So I decided just to keep it off for now because it's easier to blow through all of this stuff. So. All right. And then this is another section of the book. It is the 7 principles of consistency. So he talked about the 5 fundamentals. Once you can understand those, the deeper you get into the book, he talks about becoming consistent in your trading, consistently profitable. Like I said, you're not going to win everything, but if you can cut your losses, cut your losers quick and learn how to let your winners ride, that is actually something that I personally struggle with because I've been hit with some big losses. So I usually try to cut quick, but at the same time, I would love to let a trade, ride itself out and, get more money, not necessarily be greedy, but be able to see the trade, to its primary endpoint or to my primary endpoint. So, but the 7 principles of consistency, he talks about, I objectively identify my edges. By objectively, that's the key word in my opinion in this sentence. You understand your edges, you understand your strategy and how you trade, but your emotions can affect you being objective to that. You might go into a trade and go down and break a rule and stay in the trade. That's not being objective. You have to adhere to your rules at all times, whether it's a winner or a loser. Because again, if you can keep your winners, keep your losers small, your winners will be bigger. And it doesn't matter what your win percentage is, you'll make more money than you lose, you will be profitable. So you have to be objective with your strategy, with your edges, whatever it is that motivates you to trade and makes you a good trader, you have to look at those objectively. And if you have to make adjustments as needed, then you can make adjustments, that's fine. Number 2, this is personally the biggest principle to me out of this list of 7. I predefine the risk of every trade. Everybody is different. You might see some people say they only trade with 5%. They only put 5% of their trade into a trade. Some people may put 10%. You heard Brad Mullins, who was the head of Mullins Trading Academy, the Discord. He said when he started out, he would put his entire account into one trade. Everybody's different, and we are not here to judge anybody else because it is their money to manage and be responsible for. But you have to define your risk on every trade. Don't just throw random amounts of money at any trade. Me personally, I will not hesitate to tell anybody that I trade my entire account sometimes in a day. My risk is usually based off of how I am doing for the day. If my first trade, I won't make more than 3 trades in a day. If my first trade is a big winner, but I also see something on my watch list that is setting up and I trust my setups, I may take that trade, but I'm going in a lot smaller. I'm usually playing with the profit from that first big winner. If I have a nice loser in the morning, it goes the same way. I will still go, if there's another trade setting up, I have made peace with the losing trade and I want to take another one, I will still go smaller. Usually my first trade of the day is my biggest one. And everything after that is going to be smaller. But like I said, what I do, may not work for somebody else. So ultimately, again, as I said, you have to define your risk in every trade. That is the first thing you have to do. Do not go into a trade until your risk is defined. You go in and you see how much money you can make. You can lose that same amount of money in about 2 minutes in the market because the market doesn't care. The market is the market. It will go on without you. It's going to be here on Monday, it's going to be here on Tuesday if you blow your account up on Monday. The market is just going to keep churning. The market didn't close during COVID. There's been very few times in history where the New York Stock Exchange has shut down. So just make sure you survive to play the next day in the market if you want to stay in the game. Number 3, along with that risk, you have to completely accept the risk that you are willing to let go of in that trade. So whatever amount of money you put into a trade, you have to be willing to accept that you may lose every single penny of that. It's not saying it's going to happen, but if you don't adhere to your rules and adhere to your strategy, it can happen. So you have to be able to accept that. And the biggest part of acceptance is emotionally, being able to lose that money and be okay with it. So don't trade with more, as far as sizing goes and how much you start your account with or how much you keep in your account, don't trade with more than you are willing or able to lose. If you have other obligations outside of trading, focus on those. The market, again, will always be here. Start small if you can't afford to trade with more. I personally started my account with $500. My wife and I, we put that together and she allowed me to trade with it. It could have been more, but that was the number we were comfortable with. And I may do with it. I've gone down, way down before, than the amount of money that I started with. And I've also made that money back and more and become, slightly profitable. So, you can start small. And you can make, just as much money as you want to make, whether you start with $100, $500, $5,000, $50,000, it doesn't matter. All it's really affected by the amount of money you start trading with is how big your profits are, but it also affects how big your losses are. So, and as Blaine likes to say, the host of the Penny Lane podcast, if you cannot start trading with a small account and build it up, then maybe you should rethink doing this. Because you'll find yourself sinking more money and more money and more money into your account, and you're just building a deeper and deeper hole. At that point, it's time to take a step back and look within yourself and be accountable for for your trading and for your mistakes and correct them. Otherwise, again, the market will kill you. Number 4, I act on my edges without reservation or hesitation. What that is saying is, whatever your rules, whatever your strategy is, once all the criteria of that strategy are met within a given trade, you pull the trigger with no hesitation. I do morning speeches every day in the Discord, and I always make sure to include that line at the end of my speech. I say, pull the effing trigger when it's time. You cannot hesitate. You can't have a second thought when that moment of truth comes, because if you do, a trade will be gone in a second. And if you try to catch it after that moment is passed, at that point you're going to be chasing, and you could win off of it. You could get lucky, but you can also get burned. I had a trade personally 2 weeks ago. Again, I trade options and I trade based off support and resistance, and we use the trigger system. And I had the ticker was BMY. It's Bristol Myers Squibb, the pharmaceutical company. I've traded it numerous times before. I've won off of it before. I know how it moves. And James LaFaith, I talked to him after the fact. He's the head of momentum trading in the Discord. He got me out of the fear of trading the open because I knew this ticker was going to trigger at open. It was sitting right on my resistance level at open. And if I would have just pulled the trigger at 9:30, it would have been a 600% win. But I hesitated. And literally in the first 30 minutes of the market open, of being open, my trigger point was at 65.40. The stock ran to 67.30, I believe. In the first 30 minutes, no pullbacks, no red candles, nothing. Looking on the 5-minute chart, 0 red candles. It pulled back to 67, and then it ran to 67.60 on the high of the day. Again, if you don't act on your edges without reservation or hesitation, you're going to miss it. And I knew I wasn't chasing that. That's a big rule of mine. I will not chase a stock, and I will not FOMO into a stock because that is the easiest way to lose money. But that is an example of, hesitating, or flinching to pull the trigger. And the rest of the day went well that day. I was still, I think, like 3% green that day on my account, which was fine. But that was the big runner. I missed the big fish. And I talked to James after that happened, and he gave me some pointers on how to trade the open, if I have conviction in my play and whatnot. So I can say, without a doubt, I won't hesitate again. And I encourage you guys, follow rule number 4. If you have a strategy that works, if your rules are set in place, to keep your losses small, when it's time to act, please pull the trigger. Number 5, I pay myself as the market makes money available to me. This is another big important one because I can attribute this or kind of correlate it to the term bag holding. If you are up on a trade, please, for the love of God, scale out and take profit. Because a winning trade can turn into a losing trade in the snap of a finger. Scale out, take profit, live to fight another day. But I mean, if you're taking profit, that's still money in your pocket that you can put to another trade. Ultimately, this entire game is about compounding. I'll go back to, how much you start trading with. You can start with $5 and turn it into $100,000 or $1 million, whatever your goal is. We have a 1% a day challenge going on in the Discord right now, and there's a compound calculator. And if you you can actually put in the amount of money you start with, and you can set, whatever, say your goal is you want to make 2% a day on your account. Ours is 1%, but say you want to make 2% a day. You can put that number in, put in the number of trading days for the rest of this year, and it'll tell you if you average 2% a day every day for the rest of this year, this is how much money you will make. I will see if Blaine can put that compound calculator link in the chat. And if you guys want to, copy and paste that into your browser, and I want you guys to go back and look at that because I think that'll completely change your outlook on taking profits and also on being greedy. Greed, what's the saying? Big, bulls make money, bears make money, pigs get fat, hogs get slaughtered. Don't be greedy. Take your profits when they are available for you to take them. Because you could give some of your profit back in the same trade, or you could also go red. Number 6, I continually monitor my susceptibility for making errors. This goes back to your plan and your strategy and all that stuff. It's pretty much being accountable, going back and looking over your trades for the day to spot any mistakes you may have made, something that, you broke a rule or something, something of that nature, or it may be something you've never seen before and it, resulted in you losing on your trade. So you can make note of that. Ultimately, you want to, always look over your trades and, see where you can improve at, whether it's a winner or a loser. You can improve in any trade that you make. And lastly, number 7, I understand the absolute necessity of these principles of consistent success, and therefore I will never violate them. This is just essentially kind of a pledge to those 7 principles of consistency. So, all right. So I really wanted to go over all that stuff. I've been waiting to just puke Mark Douglas's stuff out for weeks. I haven't put anything on Twitter about it. I haven't talked about it at all. I just been wanting to just throw that up, and I figured this would be a really great place to do that. And like I said, I'll make sure I post all those links and stuff onto my Twitter page and onto the Discord. But again, I highly advise you guys to please read that book. It's a really great book on trading mentality. So what I'm going to do, I'm going to check and see if we do have any questions now, and then I'll actually deep dive into my own material that I have to kind of take all of those principles and everything in that book and everything else that I personally learned as far as mentality goes, and we can figure out how to tie all that together so you guys can be profitable. I want literally everybody that I come in contact with. I'm not here to be a guru or anything like that. I want everybody to make money and to fulfill their goals in trading. So, and let me check the chat and see if we got any questions. Oh, we got more MTA guys here. Callum's here. A little hesitation, story of my life. Yes. Yeah, and you were FOMO in way too late. That happened with me on Thursday. I was trading Fisker and it broke to my trigger, but I was already in another trade. I exited that trade, went back to FSR, and FSR was already gone. Essentially, at that point, I was just chasing it. I got out like 4% green, but I had missed the chunk of the move. So that's actually one thing that I will go. I'm actually going to go over I'll put my trading plan up so you guys can see it. But that's one thing that I have in there to avert that. If a stock has already ran, and with me trading options, I look at the premiums and how much they've moved. If the premium's already up like 80 to 100% on the day, I'm not touching it. I don't care if they go 1,000% because they could go back to zero and they could go red. So I'll share my screen again here. And get this rolling again. Now for this one, I'm going to go back to my notes. It'll be easier for you guys to read it. Okay, so taking into account the principles in Mark Douglas's book, I pose a question: how do we keep emotions in check while trading? The biggest key I can say is always trade your plan, and within that plan, make sure you have it tailored to cover any variables that may come up, any known variables that may come up. You're going to run into situations where you're in a trade and it might knife on you if you're long on it. And it might knife for reasons that you've never seen. Maybe it wasn't bad news or an offering or something like that. Or if you're relatively new to the market, as I said, what happened on Thursday, the Fed was speaking, their monthly meeting notes came out, and then the following and press conference came out after that. You may have never experienced that before. So you may have been in a trade and it just flushed and you're thinking it's just a dip, but it just keeps dipping. Those are the unknown variables, but you can also make note of that for the future. I think the Fed does a meeting every month, if I'm correct. Somebody can correct me if I'm wrong, but there's always news about the Federal Reserve and the central bank and all that stuff that those things can move the market one way or another. So, always be prepared for that. But essentially, like I said, make sure your plan covers all variables that can make or lose you money. So here, I'm going to pull my trading plan up again so you guys can, I know I went over it in the first session, but I kind of want to drill it in everybody's head. This is what I feel a trading plan is. It is a strategy, whether you're day trading, swing trading, whatever, options, doesn't matter. It is rules. So you have rules in place based on your strategy that you trade, and it is a why. I post my trading plan, parts of my trading plan all the time. My why for trading is literally financial freedom to spoil my kids. and my wife, and to give back to my community. That's the only motivation I need. Your motivation may be to, it may be a little bit more specific. It may be to buy a house. It may be to buy a nice car, or, be able to travel, or whatever. Whatever is going to motivate you to want to trade and want to be good at this and successful and profitable, but also, will hold you accountable. That'll be your why. As you can see in my trading plan, I keep this on my notes. I literally just have all kinds of stuff thrown in here. So yeah, you have your why, and then you have your strategy. Again, I personally trade options. Usually I day trade. This isn't really a swingers market. So, every once in a while, overnight something, if it closes above or below a key support or resistance, it's been kind of successful. Every once in a while, I'll take a hit. I'll overnight it some calls on or like 2 lotto calls on Bank of America. Wednesday nights, Wednesday or Thursday. It was the day of the Fed meeting. And then they dumped that market open. So I took a hit. But again, my sizing was good. I literally bought 2 contracts. Didn't really matter. I still finished the day up 13% for the day. So it wasn't a big deal. But yes, like I said, it's not a swingers market right now, but I trade options. And I'll go through my strategy so you can see. I don't know who watched the video the last time, or who was in the session the last time I watched the video. I pulled my strategy up, but it looks a lot different than it did a few weeks ago. I'm literally trying to cover for every variable that I know of while trading. This is how I create my watch list. This is how I answer my trades. I'm looking at 5-minute time frame on the chart to answer. Oh, sorry. I'll go back up here. Start at the watch list. So, like I say, create my watch list. I have a huge list of tickers in my phone. I went over this last time in the session, and again, that list has been updated. These are tickers that I like going into next week. I've been charting all weekend. I keep the ETFs up on my screen to kind of see how the mid and the large cap stocks are moving. And then I literally just have ticker after ticker, lists that I've built up based on, each sector. You got, tech and communications, you got consumer companies, which is consumer discretionary, and consumer staples, which is pretty much essential consumer goods, energy and industrial stocks, and finance and health. I got a few sectors that I don't trade because they don't get a lot of volume. But this is how my strategy starts, making sure I have plenty of stocks that I can look over to be able to find some things to trade. And then I check open interest if you trade options. Pretty much open interest is just kind of another definition of the volume, but it's the amount of open contracts on a given strike price on a given expiration date. So, and then once I find a ticker, the first thing I'm doing is checking the amount of contracts that are open. That way I know that the option chain for that ticker is liquid. And then I define, the first thing I do, I pull the chart up. I'm looking for a trend. Is it an uptrend or is it in a downtrend? I define a pattern. I'm still learning patterns. I've gotten a lot better over the past few weeks. Again, still learning, but I'm trying to find a pattern in there. I identify consolidation. Usually to me, what I've gathered is when a stock is consolidating after an upward or a downward move, it's usually preparing for another move up or down. And then I define my risk and my reward. My risk reward is not defined by the amount of money that I could stand to lose on a trade. Mine is based on the chart. My risk is the amount of money that I'm willing to put into the trade. My reward is the upside or the downside on the trade. Is it worth me putting this money into this stock right now and holding this for the day? Am I going to get a big enough move to make it worth my while? And I'll give you an example of that as well in Weevil. So again, these are the tickers that I like for the week. I got Chewy, Fastly, Blink, Fisker, Beyond, and Etsy. These I feel are ready to go, the first couple of days of the trading week. If I'm looking at the chart here, I see a good upside potential on chew. I have my pattern drawn out. I'm not saying it's the best pattern. I'm not saying it's perfect, but it looks, good enough for me. And I also, make sure I have other people helping me to verify that I'm drawing my trend lines right and whatnot. So, but like I said, this stock looks like it's ready to go to make a move, early next week. I think a better example, I'll go with, let's check out Etsy. Here's another one. Yeah, this one had a gap down right here, from this candle down to that candle. So you see there's a nice gap there. Gap hasn't been filled yet. The stock has essentially been consolidating since May. But it's also following a trend line up. So I'm thinking, okay, this stock may be ready to go. I've identified the pattern. I've identified that it's consolidating. And here's my risk reward. I play based off of triggers. So I'm going to buy calls if the stock goes up to a certain price point. I'm going to buy puts if it goes below a certain price point. That green line, that is my call trigger. I haven't put a put trigger in yet. But what you can basically see is if the stock breaks that call trigger, there's a whole lot of upside potential for me to make money there. On the flip side, if the stock hits my put trigger, which is essentially breaking this trend line, that's why I haven't drawn the put trigger yet. There's a lot of downside potential too, because what I've learned, if the stock loses its trend, it's going to have a nice fight to get back in the trend. So if it breaks with volume and conviction, it's worth playing. So that's my risk reward. Like I said, I'm looking for upside and downside potential, and is it worth me putting my money on the line to realize that upside or that downside potential? And once all of those things are taken care of, I chart my trigger levels. And then entering trades, me personally, I work while I trade. So I can't always look at my screen, but I make sure I set alerts, before my triggers are hit. And usually I haven't missed a trade yet because of work, because I do drive a truck, but I know there's that chance where I will miss it. But if I can catch them, and I've been fortunate enough to catch them at this point, I'm looking at the 5-minute chart. I'm looking at the volume. I'm looking how the candles are forming. I'm looking at the previous volume, etc. Looking for an entry, and I will not enter a trade before my trigger is hit, which we'll see in the rules down here. So, and then while I'm in a trade, I set my initial stop loss at 15%. So that's more of the defining the risk aspect. Of what Mark Douglas was saying. I'm willing to risk, X amount of my account on a trade, but I'm always going to mitigate that risk, by setting an initial stop loss of 15%. When I'm up 15%, if I have multiple contracts, I will scale some out and I will move my stop loss up to break even. And then every 15% that I move up, I just continuously move my stop loss up. Like I said, my account is pretty small. So that first scale out that I make, that's just pretty much to secure profit. Once I move my stop loss to break even, I'm going to be green on the trade. So I don't worry about scaling out past that point. Once I go in a little heavier and my account grows a little more, I'll probably reassess that. But that's just what I have in place for now. And then another thing while I'm in a trade, I use the 5, 10, and the daily chart to ride the trade out, find an exit, ensure the volume for the trade is stronger in my favor than against me. And then as far as like overnighting plays, I look for overnight plays on tickers that close above or below key levels. So, I'm just literally showing you guys this as an example of, up until this point, every variable is covered. Every known variable is covered within my strategy to mitigate my risk and, keep me from not only blowing up my account, but also, to keep me profitable. Everybody, when they trade, they usually have that big winning trade. I'll pull the chart up for you. You get the beginner's luck, and then you ride it on back down. You get confident, and then you get smacked in the face. And it's literally just a downtrend. And then at some point, your account will consolidate where it says consolidation, the skills there in the middle. And then you adopt an actual trading plan, and then your profits are exponential. So I'm trying to get past that exponential profits risk, exponential profits area, and skyrocket. I'm not saying it's going to be overnight, but that is my goal now. I have a trading plan that works for me, and it's shown me that it's worked for me. So I literally encourage everybody, to come up with a trading plan. And this is the last part of my plan is my rules. Like, not everybody's rules are going to look the same, depending on your strategy or whatnot. But the first rule that I have is I will stick to my final watch list. I actually just updated this yesterday. So this is an example of my strategy, or my plan is constantly being updated. 2 days in a row, Thursday and Friday, I missed one of my own trades that I had on my watch list because there was another trade that caught my eye. Thursday, I was green. Yesterday, I was break even. I had eBay on my list. That was literally my number one watch for the day. My plan was to stalk it until my trigger hit. I was looking for puts because it was looking like it was ready to die. It consolidated. It was looking like it was going to break down. Now, I was prepared whether, if it broke out, I was going to play it on the upside, but I wanted that downside move. Here, I'll pull the chart up here just to show you. But eBay was my play. But yesterday morning, Palantir, PLTR, they had news that they had acquired a government contract. And I took that trade as a news play. And by the time I was out of that trade, eBay was already gone. So here's that red line is my put trigger. Boom, right it open. eBay breaks down. It tries to retest it right here on this candle, on the first candle it opened. Fails, and it literally fades down. My trigger was at $65. Made it down to a low of the day of 63.14, low of the day. They don't have the options contracts on here, but those options went over 600% yesterday. And I missed it because I didn't stick to my actual watch list. And I essentially chased the news play. I didn't chase it because I had it charted, but I chased it. And I mean, look, I charted this Thursday night. I see a red hammer candle going down. The market dumped on Thursday. eBay looked, even though growth stocks ran on Thursday, a lot of the market dumped. Growth stocks were hot. eBay was a lagger. That hammer down told me that, okay, this is probably going to die. It's really tight in this pattern right here in this triangle. I'm going to guess puts. It could break out, but the puts were my reward. That's why I was wanting to take that trade. And you get that fat red candle. I missed out on it. So I go in yesterday. I will stick to my final watch list. There's a reason that I put those tickers there, and those will have my full attention. I had to learn to block out everything else going on in the market and focus on what's working for me. Rule number 2, I will take no more than 3 trades per day. Part of that rule is because I work, so I can't trade, constantly throughout the day. And the other part of it is to avoid over trading. If I hit a big winner on my first trade, 9 times out of 10, I won't take a second trade. But if I have a lot of really great setups and all 3 happen, 3 of them trigger that day, I'll take all 3 of them. At that point, it becomes about my sizing. Number 3, this previously said I will not trade before 10 a.m., but after talking to James, I updated it to I will not FOMO at open. I will trust my levels, and I will trust my ability to read the chart. If the chart is telling me to take the trade, I will not hesitate to pull the trigger, but I will not FOMO at open. I'm not going to miss out on anything. There are plenty of other plays to be played. Number 4, I will not chase. If a stock is up, a few percent on the day, I know those option premiums are flying. I'm not going after it. If I missed it, I missed it. Number 5, I will trust the chart. The chart doesn't lie. There is a million different indicators and all, moving averages, everything. There's so many things that people use. If you see my Weeble, I literally have volume and the candlesticks. Every once in a while, I might throw EMAs up or VWAP up intraday. just to kind of confirm a trend, but I take them right back off. I like to keep it simple, and just trade off the chart. But like I said, the chart doesn't lie. Whatever you choose to use, that's fine, but always trust the chart, trust those candles, and trust the volume. Number 6, I will not enter a trade before it is triggered. So if a stock is coming up, say eBay flirted with this all day, say at open, it bounced off that red, and say it just faded. It might not have, ran, but it may have gone between 65 and 65.30, 65.50. I'm not taking that trade. I will not take a trade before it's triggered because I have learned my lesson. Going in before a trigger can burn you. This is a big one for mentality here. I can shout out Happy Gilmore. That's my boy. Number 7, I will not look at my P&L while I am trading. Again, trading is a game involving money. And I would advise any of you guys, if you don't put any other rule, if you like the rules that I have, that's fine. If you don't like them, if they don't fit your style of trading, take number 7 and put it on your list, please. Actually, take number 7 through 10 and put it on your list, because this is when we're talking about mentality and emotions. Do not look at your P&L. If you get into a trade, you may have a bad entry. You may have, jumped the gun a little bit, but if the chart is still telling you to stay in a trade, that's fine. You may enter a trade and be red. That's the point of having stop losses. That's the point of having, those things in your rules to avert that. You may get stopped out the moment you get in, but you can look for another entry, as long as the chart is telling you to do that. But do not look at your P&L, please. You may get into a trade, you may be immediately down, 6, 8%. Sometimes, with options, you can be down 20, 25% the moment you enter a trade and immediately get stopped out. So do not look at your P&L and just focus on the chart. I promise you, it will do wonders for you. Number 8, I will honor my stop loss and my take profit rules. If I get stopped out of 15%, that's it. There's no moving my stop down. Like, okay, hey, maybe this will work. Maybe I need to give it a little bit more time. No, 15% is my cutting line. That's it. Because yes, it could work. You may, it may just be a case of the market makers trying to shake you out. As true as that may be, you don't know what's going to happen. Anything can happen. So you have to mitigate your risk. Again, if you have to re-enter the trade, or if you want to re-enter the trade, you can do that. Number 9. Take profit. Yeah, I'm always taking profit at 15%. That's the other thing. And then at that point, I just move my stop loss up as the trade goes in my favor. So that rule I will not break, because that is an easy way to blow up your account. And then you have to, hit the reset button with your own money and start over. Number 9, I will accept a winner and a loser. This is more so I will accept a losing trade, but it kind of goes the other way as well. I will accept the winner, which means I won't get greedy. I'm going to look at the chart. If the chart's telling me it's time to get out, if I'm in calls and it's running, but then the chart's telling me, okay, buyers are starting to get exhausted, or this is going to start fading here, it's time for me to get out. You want to buy in the strength, you want to buy in the weakness, you want to sell in the strength, essentially. If I got a resistance point coming up or a price target, it's time for me to get out. A losing trade, I will accept the loser. I will walk away from that trade. I won't revenge trade that ticker anymore. I won't revenge trade that ticker. It is what it is. You lost. Yeah, it's fine. It's time. At that point, I'm moving on. And number 10, I will accept when to walk away. This is the over trading thing. This is the revenge trading thing. And this is the hot hand fallacy thing. If you hit it big on a trade, I usually recommend everybody. We had a guy in the options room yesterday. He played NVIDIA. The first 30 seconds of market open, he made $3 grand. And we were in voice chat when this happened. He unmuted his mic. He was so excited. He was telling us how much he made. And the first thing I told him, I was like, shut your computer down. Take a break. Take 30 minutes. because the euphoria that you're feeling right now, he likes to trade Tesla and Nvidia as well. He likes to scalp. So I told him the euphoria you're feeling, you're going to run over to Tesla and you're going to give that money right back. So shut it down, take a breather, and then come back to the market later on. And if you find something you like, take it. I would recommend anybody, if you hit a big winner or if you hit a big loser, walk away from the screen for at least 30 minutes. If I hit a big winner, I'll turn my phone off, or I'll turn my broker off for an hour and just enjoy being at work, especially this time of year. The biggest winner I had was on AMC a few weeks ago. I hit a 350%er, and I knew it. I knew it from that moment. I'm like, I'm gonna trade again. So I literally closed Webull out, and I was sitting at a job when I hit it, and I just sat there and I just stared off into the sky and just enjoyed how nice it was outside. If you trade from home, go take a walk. If you work and trade, go do some work. But please, except when to walk away. And the best time to walk away is on a big winner or a big loser. And you can always come back. The market ain't going nowhere. So, yeah, that's my strategy. I know I got a little bit in depth there, but I just wanted you guys to really understand, ultimately, my strategy is to cover any bases that I may, run into, or sorry, any variables that I may run into, so I can be consistently profitable. And like I said, your plan is going to be your strategy, your rules, and your why. And like I said, keep that plan accessible at all times and review and update regularly. Do we have any questions? I kind of left the template kind of open because I figured a lot of people would have questions on, how to build a strategy or, certain things that you may run into as far as emotions or anything that you personally experienced that you might want to, ask how, somebody may handle it and whatnot. So let me go back to the Zoom here, see if we got any questions in the chat. Everybody likes looking at their P&L. Yeah, who was that, Khalil and Anastasia? Yeah, do not look at your P&L. I know we got Heavy Gilmore in the options room, and he literally, anytime somebody has a losing trade, that's the first question he'll ask. Did you look at your P&L? It will drive you insane. It'll keep you in a trade too long, going both ways. So if you're up on a trade and you see how much you're up, you might be up 100% on a trade. If you stare that P&L down, it's going to keep you in there because you'll be greedy. And again, like I said, a winning trade can become a losing trade in the snap of a finger. On the flip side, if you're down on a trade, it can keep you fearful. Like, okay, well, if I exit this trade, I'm going to lose that money. You're scared of losing money, which, that's all the market is. It's money changing hands. So you have to be mindful of that, going both ways. Because if you look at your P&L and you're red, at least ultimately on the downside, at least back on. So. Yeah, that's the biggest thing. If you go into a trade and Anastasia said about going heavy and risking too much of your account. If you enter a trade and you're immediately nervous or fearful of things going wrong, that's a sizing thing. But that's something that you can write in your rules. Like I said, it could be 5% of your account, it could be 2%. Like I said, I'm literally comfortable enough, risking my whole account every day. I keep that stop loss in place, but if I lose on the trade, then I lose on the trade. But again, I also know when to walk away as well. The biggest loss that I had, I'll talk about it here. It's since I started trading options, the biggest loss I had was actually last week, and it wasn't an issue of sizing. It was more so the spread and the OI on the option, and that's why I got the thing in the rule saying I won't take a stock with less than 500 OI because the spreads are garbage. I was in Rite Aid. The ticker is RAD, and it triggered. It ran a little bit, but the spread was so bad that me getting out of the trade was going to cost me money. And then, it kept, initially me getting out of the trade was going to cost me money, and it kept running. I had my stop loss set, and then all of a sudden there was a knife, and the spread literally jumped over my stop loss. I've never seen this before. So I had the market order out, and I took a 38% loss on the trade, and that was 30% of my account. And I was sick. So, I'm not without fault. I'm still relatively new trading, and it happens to everybody. Luckily, I think for the challenge, this is on the challenge account that this happened. I started the challenge account with $300. That actually, and I had a couple of red days, but that ran me down to like $136 on the challenge account. This week I was actually up 70%. So I'm still not back to where I started the challenge at, but I got back up to 230, 231. But I'm coming back up on where I started. But that was a lesson. Watch the open interest, watch the spreads. I won't take a trade on an option that has more than like a 3 or 4 cent spread anymore. The spreads on RAD were wild. They were 20, 30 cents. It was crazy. But lesson learned. Anastasia, I'm sure you learned a lesson on going heavy, and I'm sure you have crafted your strategy to account for that. So, Will, he's talking about an APTX scout. Oh, okay. I didn't account for this. Okay, so if you look in the chat, Khalil, he's talking about a scout. Pretty much a day trade ended up becoming a long-term investment, as a lot of people like to say. Essentially bag holding. That is a killer. I didn't put that in here because I didn't even think to go over it. I know a lot of people know what bag holding is, but at that point, it becomes bag holding leads to losses, and it also leads to more bigger losses, but it also leads to missing other opportunities. It becomes about opportunity cost, man. The biggest thing I can recommend, I get people that DM me all the time, and they say they're in a trade and they're down. I had a guy, he DM me, he started with 6 figures in his account, and it ran down to below 50 grand. And I'm like, first of all, I can't imagine losing that amount of money. If you start out with $200 to $250,000, and you get it down to 40, like I couldn't imagine losing that much. But okay, it happened. If you're still holding these stocks, it's time to cut them. You got to cut them out because you can keep bleeding your account dry, or you can think about the opportunity cost on the trade. If you keep that money in that trade and it keeps losing, there's literally runners every day. So you have to make peace with, getting out of that trade. You're going to have to get that, and don't focus on getting that money back. I know that's going to be the first thing that comes to your mind. I got to make this money back. No, just simply focus on making the money. Literally everybody goes through this. That chart that I showed you about the trader's journey. I have a thread up on Twitter about it, about my personal journey with a lot of gifts and a lot of dramatization, but it's true. It happens. Everybody goes through that. I think James is the first person that I've ever heard that said they were immediately profitable when they started trading. But, he was his story was he was a long-term investor starting out. So, but everybody goes through that. Everybody's going to have their first lucky trade. They'll have that pop and they'll have that drop, just like a lot of these tickers have been doing for the past few months. Start at market open, they pop and drop. Your account will pop and drop. But you have to identify what's not working, and you have to be accountable to your part in it not working, because ultimately this is you against you. if you can accept that and you can be accountable to it, then you can change it. And that's when the bell curve on your account is going to start to change. And then you're not going to be profitable right away. But if you keep grinding, you keep working, you keep compounding your account, then, before you know it, you'll look back on, the trade that you were bag holding a month ago. And you'll be like, oh, that was just a bump in the road. So that's the biggest thing that I can say is, just weigh your opportunity cost with standing that trade, especially if you got a lot of money in it. And so it's hard enough out here in the world, without having to worry about losing a crap ton of money in the stock market. So don't get it twisted. I get killed too. Oh, everybody gets killed, James. But I mean, there's a reason you're a department head. I know everybody takes losses. And I know that's the biggest thing that you focus on is your losses. And if nobody has, heard James LaFaith and Ace on the Penny Lane podcast, I would highly recommend listening to that. Because it's a really great episode. Focus on your losers and learn from your losers. Don't be blind to them. Don't think, you'll just make it back on the next trade, because that's how, the losers start to add up, and that's how your account starts to bleed. And eventually, again, it's you versus you. It's not you versus anybody else. It's literally you versus your emotions at the end of the day. If you can be accountable, then, you can become profitable. So, yep. Don't forget to scale out as you get profit. Yeah, we talked about that. Yeah, always scale out. Always scale out so you can stay green. So, yeah, I mean, you can always, say if you want, you get into a trade, say you win on it, but the trade is still, holding trend, the same trend that you were in. You can always look to re-enter on a bounce at support. Balance support, selling resistance. That's how people scalp. That's how people, that's how scalpers do their thing. You can do the same thing. So, but yeah, that is pretty much all I have for you guys. Like I said, if anybody needs any help with, creating a plan, if you having any bad trades, if you haven't had a string of bad trades or anything, I can put my my Twitter handle in the comments here. Please reach out to me. If you're an MTA, please reach out to me. I'm in the options room. I'm in the trading floor. I'm literally there getting people hyped up, but at the same time, like, I know my contribution to the trading community is, being able to uplift people, when they're up, and also, being able to keep people up when they're up, and also helping them get up when they're down. So, please reach out to me if you need any assistance with, creating a plan or, finding a strategy that works for you. I will do all I can to help you. And if I cannot get the answer, or if I don't have the answer, I can get you to somebody who can get that answer for you, who can help you. If you want to momentum trade, if you want to day trade, I literally have a list on Twitter of people you can reach out to. If you want to swing trade, I have a list. Options, Happy Gilmore is my guy. He's taught me the majority of everything that I know. I can get you where you need to get to if I can't help you, but I literally want everybody to win. My goal with everything I'm trying to contribute to the community is to make sure everybody makes money, because I feel there is enough room at the table for everybody to eat. We don't have to be greedy. Everybody can win. So, yeah, I want to thank you guys for joining me with this one. I know it was kind of last minute putting it together because of Father's Day weekend and whatnot. I didn't know, how the dates were going to work, but everybody that joined, I really appreciate you. Again, just reach out to me if you need